It is time to talk finance. Thanks to our partners at Forsyth Barr, the price of gold, you might have noticed, is having a very good run, up around 30% in the past year. So is now the time to invest? Here to break it down for us is Forsyth Barr Associate Advisor Mark Richardson. Good morning to you, Mark.
Yeah, morning.
You got gold in your portfolio?
You do have a little bit. Have a little bit. Probably could have had a little bit more, actually, the way it's gone. Yeah, it's been on a really good run, which is maybe some people could say a little bit odd because of the way that the markets also have been going forwards, because it's often seen as a good diversifier. It's not a yielding asset. It's not going to pay you an income stream, and it's generally seen as a good store of wealth that holds its value in times of inflation.
People normally dive into it when they're feeling worried about stuff, right?
Yeah, and people are feeling worried. That's probably the point. The markets have been moving forwards, but basically dominated by a select few stocks, and that's starting to make people nervous. But probably the price of gold has been fueled by three main things. It's been fueled by inflation is still sticky, and gold is a very good hedge against inflation. It tends to hold its value. You can't just print more of it. You can try to dig more of it out of the ground, but that's not easy. It is a rare metal.
Expensive.
Yeah. You've also got the geopolitical uncertainty and the uncertainty around markets at the moment. So, people are naturally sort of going to that safe haven. And you've also got the fact that the US debt is so large. People are worrying about the US dollar, therefore, as the world's currency. So you've got a lot of central banks, particularly in Asia, who are buying up gold and putting it into their stores. So that's probably the structural mover that I think will continue in the mid to long term.
Can I just buy jewellery?
Well, you could, but then if you want to, then you sort of have to cash it in, don't you? If you actually want to make some money.
Take it down to dollar dealers and
find
out what the price is.
I guess it has pulled back a little bit. Is this a good time to buy? I think, when you talk about markets, you can't time them. Just get in, have some of it, use it as a diversifier in your portfolio, maybe anywhere between 2 and 10%, depending on how conservative your outlook is. I think that the central banks continue to buy it up. That's probably a structural thing that will continue. I think we will see an element of volatility in the near term, but if you're prepared to stomach that, then it's a good thing to have in your portfolio.
Look, I joke about the jewellery, but there are a number of ways you can actually buy gold, right?
Yeah, there is.
And some of it is physical. It's locked up in a vault somewhere, right?
Yeah, you can buy it. You can have a little bit of a gold bar, but you'll probably have to pay insurance and you've got to pay storage. That'll probably be on you. You can invest into it via funds and exchange traded funds which hold the physical gold. So in holding a little bit of that fund, you are holding physical gold.
We just trust that they've got it locked up somewhere on our behalf.
Yeah, and obviously fees and the likes will come with that. But as the price of gold moves forward, obviously your little chunk of that fund moves forward. And then there's another way you can play it, which is buying into the individual gold miners. That now, obviously, their success is tied to the price of gold. Some are more successful than others. So if you want to buy one particular gold miner, that's probably quite risky, and it's a little bit, sort of needle in a haystack sort of scenario, throw a dart at a dartboard. Or you can buy into the various funds that invest into gold miners. That's probably run a little bit. That's probably going to have more volatility and a little bit more risk than holding the physical thing.
The key here, though, is that you're probably not wanting to plough everything you got into it, right? This is a diversifier rather than an investment strategy.
Look what it's done over time. Yes, it holds its value, but does it actually increase in value like share markets have? And no, it hasn't. So if you've got the time and you are looking for growth over the long term, yeah, sure, it might smooth out the volatility and smooth out the ride, but history has shown that if you're over the long term, your portfolio should be driven by equities.
Or crypto, because that's supposed to hold its value against inflation, isn't it?
Yeah, I know some of our analysts at Forsyth Barr watch this, so I don't want to promote crypto too hard. That makes them uncomfortable.
Yes,
look,
it makes me a bit uncomfortable too.
It's not, the difference is, there's a gold bar. What is Bitcoin? What is cryptocurrency? What's driving it? There's probably a lot of opinion around that. But yes, it's a thing. It is another, I don't know, people argue that, people are split over whether you can call it a store of wealth, but it is another alternative asset which you can just put into your portfolio to provide diversification.
Great episode of the Prosperity Project on cryptocurrencies this week. Self-promotion alert.
Right.
Go have a listen.
Okay.
Thank you so much, Mark Richardson, Associate Advisor at our partners Forsyth Barr. It is 8 o'clock.